Good morning, and happy to have you all tuning in to today's episode of Crypto Daily. Today, we're going to tackle some major stories in the world of cryptocurrency. We have some thought provoking statements from key players in the financial industry, which are causing quite a stir in the market.
That's right. Starting off, we've got Jamie Dimon, the CEO of JPMorgan Chase, making headlines again with his stance on Bitcoin. If you recall, Dimon has been a vocal opponent of Bitcoin, and it seems like his views haven't changed.
Exactly. Dimon is still convinced that Bitcoin has no intrinsic value. He even went so far as to say that the primary uses of Bitcoin are for illicit activities like sex trafficking, money laundering, and ransomware. Those are some pretty strong claims.
They are, and it's not surprising that Dimon would make these statements given his history with Bitcoin. However, it's interesting to consider the implications of his words. If Dimon truly believes that Bitcoin has no value, then it's likely that JPMorgan Chase won't be investing in it anytime soon.
That's right. And it's not just Dimon's personal views that matter. As the CEO of a major bank, his opinions can have a significant impact on the market. But on the flip side, we've got some contrasting news from the FDIC. It seems like there might be a change in attitude towards cryptocurrency on the horizon.
That's right. Travis Hill, the incoming interim chairman of the FDIC, recently gave a speech criticizing the FDIC's current stance on digital assets. He suggested that the FDIC should make it easier for banks to work with crypto clients rather than making it more difficult.
This is a pretty significant development, especially considering the current regulatory environment. If the FDIC were to change its stance on cryptocurrency, it could open up new opportunities for banks to get involved in the space. And that could have a major impact on the market.
Absolutely. It's going to be interesting to see how this plays out. Will the FDIC actually change its policies? And if so, how will that affect the broader cryptocurrency market? We'll be keeping a close eye on this story as it develops.
Speaking of developments, we've got a lot more to cover in today's episode. From market trends to regulatory updates, we'll be diving into all the latest news and analysis, so stay tuned. It's going to be a packed show.
That's right. And as always, we want to hear from you. If you've got questions or comments about any of the stories we're covering, feel free to reach out to us on social media. We'd love to hear your thoughts.
All right, let's move on to our next story. We've got some updates on the latest market trends, and we'll be exploring what they mean for investors.
Building on what we discussed in the previous segment about the market conditions, it seems like Bitcoin's price action is raising some eyebrows. Specifically, the latest movement seemed to be the inverse of what we saw back in mid-December when it hit record highs above $18,000.
That's right. If you recall, back then we were talking about uptrend exhaustion and how it seemed like the market was due for a correction. Fast forward to today, and it looks like we're seeing the opposite. BTC's swift recovery from $89,000 on Monday is hinting at seller exhaustion.
Exactly. And what's interesting is that this pattern is almost a mirror image of what we saw in December. It's as if the market is following a similar trajectory, but in reverse. The question on everyone's mind, of course, is whether this means Bitcoin has finally hit its bottom.
Well, it's difficult to say for certain, but it's definitely a promising sign. And with the US CPI data coming out on Wednesday, we can expect even more volatility in the market. It's going to be a wild ride, that's for sure.
Speaking of promising signs, it looks like crypto bank Signum has just achieved unicorn status with a $58 million funding round. This gives them a valuation of over $1 billion, which is no small feat.
That's right. And what's even more impressive is that the round was led by BTC-focused venture capital firm Fulgur Ventures. This just goes to show that there's still a lot of interest and investment in the crypto space, despite the recent market downturn.
Exactly. And it's not just the funding itself that's significant, but also the fact that Signum is a digital asset bank. This shows that there's still a lot of potential for growth and innovation in the crypto industry, even in the face of regulatory uncertainty.
Absolutely. And it's worth noting that this funding round was oversubscribed, which just goes to show that there's still a lot of appetite for investment in the crypto space. It'll be interesting to see how Signum uses this funding to drive growth and innovation in the industry.
Definitely. And as we continue to monitor the market and its developments, it's clear that there's still a lot to be excited about in the world of crypto, whether it's Bitcoin's price action or innovative companies like Signum, there's always something new and interesting on the horizon.
Building on what we discussed earlier about the growing tension between governments and the crypto industry, it seems the U.S. is tightening its grip on another crucial sector. The Biden administration has just unveiled sweeping restrictions on the export of artificial intelligence chips and related technologies.
That's right. This move is seen as an attempt to maintain U.S. dominance in AI while preventing adversaries from exploiting advanced systems for malicious purposes. The timing of this announcement is interesting, coming just days before Donald Trump's transition as president.
Exactly. It raises questions about the motivations behind this decision. Is it a genuine attempt to protect national security, or is it a last-minute effort by the outgoing administration to leave its mark on the industry?
Whatever the reason, this restriction is likely to have far-reaching implications for the global tech industry. It's also worth noting that this move could be seen as a continuation of the U.S. government's efforts to exert control over emerging technologies, including crypto.
Speaking of which, Binance US has been at the receiving end of some harsh treatment from the SEC. The exchange's interim CEO, Norman Reed, recently spoke out about the debanking of Binance US, calling it Operation Choke Point in action.
That's right. Reed claimed that the SEC's lawsuit against Binance US was unfounded and has had devastating consequences for the exchange. They lost thousands of customers, saw billions of dollars in assets leave the platform, and were forced to lay off 70% of their staff.
It's clear that the SEC's actions have had a significant impact on Binance US. However, it's also worth noting that the exchange is staging a comeback. They expect to have USD fiat rails operational again within the next few weeks.
This raises an important question. Can crypto exchanges and companies operate effectively in the U.S., given the current regulatory environment? The SEC's actions against Binance US seem to suggest that the answer is no, at least not without significant challenges.
The SEC's approach has been criticized by many in the industry, who argue that it's stifling innovation and driving businesses offshore. It'll be interesting to see how this situation unfolds and whether the SEC's stance on crypto changes under a new administration.
One thing is certain, though. The relationship between the U.S. government and the crypto industry is going to be a key theme to watch in the coming months. We'll continue to bring you updates on this story as it develops.
Building on what we discussed earlier about the evolving landscape of digital art, I'd like to touch on a new AI model that's taking the anime art generation scene by storm. Illustrious, based on Stable Diffusion XL, has managed to carve out a massive niche for itself in just 3 months, forcing Civitai to create a separate category to handle its vast ecosystem of resources.
That's right. What's interesting about Illustrious is its approach. While other models like SD 3.5 and Flux focus on lengthy natural language descriptions, Illustrious seems to be going back to the basics with a twist. It's almost as if they're saying less is more, and it's clearly working.
Exactly. The fact that it's become so dominant in such a short period is a testament to its innovative approach. And I think this speaks to the broader theme we discussed earlier, the rapidly changing landscape of digital art and the role AI is playing in shaping its future.
Absolutely. Now, switching gears a bit, let's talk about Bitcoin. We've been following the price fluctuations, but there's another metric that's just as important, if not more so: mining difficulty. It's now more difficult than ever before to mine a new block, with the difficulty hitting an all-time high of 110.45 trillion on Sunday.
That's a staggering number. For our listeners who might not be familiar with the concept of mining difficulty, can you break it down for us? What does this mean for the world of Bitcoin, and how does it impact mining operations?
In simple terms, mining difficulty is a measure of how hard it is to solve the complex mathematical equations required to validate transactions and add new blocks to the blockchain. The higher the difficulty, the more computational power is required to solve these equations. This means mining operations need to be more efficient and have more powerful hardware to remain competitive.
That makes sense. And what about the implications for the price of Bitcoin? We saw it take a hit earlier in the week. Is there a correlation between mining difficulty and price, or are these two separate issues?
While there isn't a direct correlation, the increased mining difficulty does have an indirect impact on the price. As mining becomes more challenging, the cost of producing new Bitcoins increases. This can lead to a decrease in the profit margins of miners, which might cause them to sell their coins, potentially putting downward pressure on the price.
That's a great point. As we continue to follow the developments in the world of Bitcoin, it's essential to keep an eye on these underlying metrics like mining difficulty to get a more comprehensive understanding of the market.
Agreed. And we'll be sure to keep our listeners updated on any significant changes in the space.
All right, we've had quite the day in crypto, from BlackRock's Bitcoin ETF landing on Canadian markets to Sony debuting their Sonium mainnet. Let's start wrapping up by diving back into BlackRock's big move.
Exactly. And it's worth noting that the iShares Bitcoin ETF is trading in both Canadian and US dollars, making it a versatile option for investors looking for simplified crypto exposure. This is another example of how institutions are working to bridge the gap between traditional finance and the crypto space.
That's right. By supporting dual currency trading, BlackRock is making it easier for investors to get involved with Bitcoin without having to worry about the technical complexities of direct ownership. And I think this is something we touched on earlier in the show, the growing demand for accessible crypto investment products.
Absolutely. We're seeing a trend of institutions recognizing the potential of crypto and working to make it more approachable for everyday investors. This could be a key factor in driving mainstream adoption and ultimately price growth.
Shifting gears to Sonium mainnet launch, what are your thoughts on how this might impact the Ethereum ecosystem?
Well, with over 14 million users participating in the testing phase, it's clear that there's interest in what Sony is building. By simplifying blockchain interactions for creators and their audiences, Sonium could help drive adoption of Ethereum Layer 2 solutions and potentially pave the way for more widespread use of NFTs in the entertainment industry.
That's a great point, and it's worth noting that Sonium's focus on NFT-based fan engagement systems and incubator programs could help foster a more robust and diverse ecosystem within Ethereum.
Exactly. It's all about creating more opportunities for creators and users to interact with blockchain technology in meaningful ways. And if successful, this could have a positive impact on the broader Ethereum ecosystem.
As we wrap up today's show, what are some key takeaways you think our listeners should be keeping an eye on?
Well, first and foremost, the growing institutional support for crypto is a big story. BlackRock's Bitcoin ETF is just the latest example of this trend. Additionally, the launch of Sonium highlights the potential for Ethereum Layer 2 solutions to drive adoption in industries like entertainment,
And in terms of market outlook, it's worth keeping an eye on how these developments might impact Bitcoin and Ethereum prices in the short term. While it's difficult to predict exactly how the market will react, it's clear that there are some positive fundamental developments underway.
That's right. And as always, we recommend doing your own research and staying informed about the latest developments in the crypto space.
Thanks for tuning in to today's show. We'll be back tomorrow with more crypto news and analysis.
Until then, stay crypto curious.